Good evening, traders. Mark here from the day trading room. Time is 20 past 11 in the evening, London time, on a Monday evening. Just sitting here reviewing my trades for the day, reviewing the market action, reviewing the key levels, all that sort of stuff. And didn't get opportunities to do a video at the weekend, so let's try and get one out here now and get some information up. The one thing that I want to note and point out is really that the opening hour or the opening 30 minutes is not as fruitful as it has been, and because of that, I mean the good old days that we had, well, pretty much from last month back for almost a year, was if you got a good read at the open, then you got a really great head start onto the day, you get a nice trade. But we're not getting that at the moment. The opens are quite sloppy and choppy at the moment. I get what I call dirty candles. So red, green, wicks, tails, just like this sort of stuff here. Very, very choppy, very dirty, directionless, and not easy to get a tape read on. And rather than frustrating yourself, the best thing to do in that situation is to step back and let a trade jump out of the screen at you. Don't go looking for the trade. Let the trade find you, because you will know as a trader that you've sat there, you've watched the market, and when a really great trade appears, it just jumps out the screen almost. The candles jump out the screen, bars, whatever you're looking at, dome, time and sales, whatever that may be, jumps out and just says, hey, you know what, this is a nice low risk reward short, a nice low risk reward, low risk, good reward potential long, whatever. And you know yourself that when they appear, they really do appear. So you've almost got to remember that in your head and say, okay, let's not try and force things too much. Yes, we want to be trading. Yes, we want to be making money, but depending on your style, depending on your strategy, depending on your approach, depending on what you're good at, you have to know when to take a step back. You have to know when the market is not in the right phase for you, and that may mean that you may only get one or two opportunities in the day. It may mean, as we had a few months ago, that you're getting 50 opportunities a day, which is just constant setups. And you've got to align yourself with the way the market's moving. You've got to adjust your strategy slightly, or if you're not prepared to adjust your strategy, then taking a step back. Guy in the chat room, Steve, regular in the chat room, absolutely fantastic discipline last week. My hat goes off to the guy. He's got a very specific setup he likes to take. I think it involves basically using the ticks and the volume and explosive moves and the capturing, that sort of thing, waiting for a little pullback. But he took one trade last week, because the market was just not offering him the opportunities that he would like. So instead of sitting there forcing it, of course, he would like to be trading. We'd all like to be trading, and you could tell he wanted to be trading, wanted to get in there, but he had the discipline to sit out. He had the discipline to know that getting involved with something that wasn't suitable for him, getting involved in chop, slop, low volume stuff, was a surefire way to do damage. And then what happens is, when you get a setup that is aligned with your style and strategy, you're too frightened to take it because you've lost confidence. And not only that, but you're having to dig yourself out of a hole that you've created by taking poor trades. So anyway, yeah, as I say, great discipline. Really, my hat goes off to him. He's traded that really well last week. Sat on his hands, and that's the hallmark of a professional. So talking about today, very sloppy at the open. Not an awful lot going on. We got that push down. We did get 1,000 ticks there, but I really wanted to talk about this here. And actually, I've recorded some live tape here. This low here, just this turning point here. So what I'm going to do is I'm going to tack that onto the end of this video, and I'll talk through that as it happened. This little couple of tick low here, I've got the ES up as well, time and sales, the dome, so I'll have a quick talk through that, but I'll tack that onto the end of this video. But what I wanted to talk about in this little section was this stuff here. Now, my premise, theory, hypothesis as we'll come into this was, hey look, this is a really strong downtrend day. We're way away from the VWAP, way away. We haven't even tried to get back to it. So the bears are in charge. Ticks have been low pretty much throughout the whole of the day, with occasional flurries into there, but not holding. Not holding. It's getting pushed lower. So hypothesis was counter trend move till about 8:15. I think I said 8:15, and then a revisit. And so this is what we got. We start to get it. So I'm sitting here, fine, great. I like this. I like this. I like this. I then start to position myself on the short side as we push up again around the 8:30 level. Great, it worked fine, and I'm scaling out, but I'm really looking for new lows. That's what I was looking for. And while we're up at this point here, that's what I was trading towards a new low. So yeah, scaling out nicely, holding decent core position, looking to scale out as we push into the lows, and then hopefully further into some panic into the close. But then this came out of nowhere, and you can't do anything about this. You can't do anything about it. This just slam straight up. This is why you have to use stops. You have to be confident and with enough conviction to stick with the trade while everything is still in line. So while you've got the volume there, you've got the ticks are okay, the price is okay, while everything's in line, stick with it, don't get shaken out. But when something like this happens and the ticks blast up and the volume explodes and the price shoots up, you've got to just ditch what you've got left and say, even if it ends up being a break-even trade, if you're late, just get out of the thing. Fortunately for me, I was in a nice entry here. I'd scaled out some, and I didn't give back. I gave back profits, but it was still a profitable trade. Disappointing. It happens. Got to manage the risk. That's what it's about. Got to manage the risk because it just could have shot off anywhere. But anyway, reassess the situation. We started to roll over again. I'll talk about the key candle. This was the key candle here. This one. If I can zoom in a little bit better on that. That was the key candle there, because Bulltrap, we pushed up here, the 8:15 peak, this is the sort of thing that I like to trade. I love this sort of setup. A little bit of an overbought, just getting the balls a little bit giddy, get them excited. Rolled over. Normal conditions, this would probably have rolled over here, but market never does exactly what I want it to do, and we got this spike up here. So when we took out the high and pull back, okay, here's okay, but the bulls are pretty nervous on this. It's pulled back pretty viciously. Sellers are pretty aggressive on this, and this here's the candle that tells you. This is the telltale candle. I talked about the candle that really gives you the information you need, and this was the one here, maybe the one after, actually, if I'm honest. Those two, if I'm allowed to say two telltale candles, okay, I will do. Push down, push back up. The bulls would have wanted to see that right up here, the next two candles minimum before, but they really didn't like the fact they come down here. And of course, then we started rolling, and then it was a case of this is now going to start taking out the lows. So it was a choppy close. The hypothesis was right, but I ended up getting on this after this candle here and making a nice trade. Would have been better to be on the whole of this all the way down because of the nature of the move, but this just came out of nowhere, and I've got to cut it. I have to cut it. I'm not sitting with a loser. I will not refuse to. I would rather cut it, reassess, and even though theoretically I was probably back in at a lower price or the same price, I've closed my log down. I don't know what my price entry was now. Shut down my logs, but whatever the price may be, it doesn't matter. It doesn't matter what price you're getting at. What matters is the risk of the trade, the potential reward of the trade. And when we're in this situation, the risk looked okay. I could afford to have a stop around here. I was looking for new lows, so I knew that around here would be my exit, or the close, whichever came first. I knew I could scale off some here, would be a sensible place, a little bit more here, a little bit more, and then into the lows. So it was a trade that worked logically as well as price action wise. So interesting day. Really, it's back on the risk management theme. It's about keeping in tune with the market rhythms, the trend days, the oscillation days, the repricing of the market, the retracements, the consolidations, understanding what phase of the market you're in, aligning yourself with that phase, and then trading to suit. Now, if you don't have a strategy to align yourself with that phase, then not trading. If you do, then utilizing that strategy. That's what it's about. It doesn't need to be more complicated than that. It's just understanding the rhythm of the market, the phase of the market, and just trying to stay one step ahead of where the market would like to go. What is it doing? What is it trying to do? What's it trying to achieve today? Downtrend day, it's exploring low prices. Any counter trend moves have been sold. Any reason to think that's going to be any different in the last 15, especially when you start to take out highs that doesn't continue very, very quickly. I didn't want to make this a long video, but I tend to carry on talking. This stuff here, if it doesn't continue after breaking highs like this, yeah, this is just time and again. This happens time and time again, sucks everybody into it, and then just rolls over on them, and it's just textbook stuff. It's getting bulls excited, buyers are getting really giddy, but when it can't hold, let it run. If you don't know how to time it, if you're not sure on time, just let it run. But always take a step back, always look and see what's happened. Look at, in relation to the day's move, it's nothing, absolutely nothing, that pullback. It's just taking out a swing high, got people excited, but it's the response to taking out the swing high that matters. That's the important thing. It's how the price reacts once that swing high has been taken out. Did it explode? No. Did it pull back and explode? No. It actually pushed lower. It tried again, and it's just that you can just see it for your own eyes now. What happens? It tries again. The bulls just get frustrated. It's not breaking. They dump it, and when the crowd dumps contracts, that's when you get the movements one way or the other. So anyway, it's talked for a little bit longer than I'd like. Yeah, interesting day. What I'm going to do now, I'm going to switch over to this little bottom here and talk through that on the tape. So we'll go with that now. Okay, got YM on the left hand side here, the dome, and we have the YM time and sales next to that, and on the very right we have the ES depth of market and the ES time and sales next to that, and in the very center I have a special version of the filtered time and sales showing 100 lots or more on the ES. Now, special version because it's been coded to get around the CME reporting issues that when it reports batches of trades as several trades. But anyway, you can email me if you want to find out more about that. Okay, so really heavy down day, which it's coming up to about an hour and 15 before the close. The low on the YM is 11.321, ES is 4.5. So watching the tape as it approaches the low, no reason to think that it's going to do anything but break through lows. We got a one tick low there. No reason to get excited about that. It's done that quite a lot throughout the day, and then it's just ground lower. You wouldn't be chasing anyway. But the point is now, this is a sort of time in the day where you may be looking for a counter trend move. So you might be looking to take shorts off, or if you're really aggressive, play for that counter trend move. Play the bull trap trade if you like. So what happened there? Well, we pushed the lows, fine. Now what I want to point out is look at the time and sales, okay, and look at the response of the market. We've pushed up 8 ticks on the Dow, okay, about a point on the S&P, so 8 to 10 ticks on the Dow. Now under normal circumstances, the sellers have perceived this as value. They've perceived it as a place to hit short, and this is not unusual in a grinding downtrend. You get a push down, you get a couple of tick low, you get a pullback, but look what's happening now. On the tape we've got a little bit more green coming through and red, fine, but we're not getting the red and the time and the red on the time and sales and the depth of market probing to low. Sellers aren't perceiving this as value yet, when normally they have done. And what I also want to point out is look how many ticks downwards we have after we've moved up from the 20 to the 30. So we move up from 20 to 30 on the YM there, and the market is not allowed to tick down. And even now on this push up here from 30 to 36, we're not seeing probes back down to say 26. We're just seeing a couple of ticks back. We're seeing support coming in, so we're building a general picture. We're seeing the price moving up the ladder, coming down a bit, but not too much, holding at high probes. Now we're seeing, you see the green on the time and sales there on the right hand side of the S&P, just showing buying interest. We're not rocketing up at the moment because we are coming up against sell algorithms that are left in the book from the way down. That's residual selling. Often get that on down moves and up moves. Guys that are left in the book didn't get the fill, whatever. It comes back up, so it takes some time to work through them quite often. But you're definitely seeing a shift in the supply demand imbalance here, and we're just watching for price response. So price pushed up from that low, one tick low, no new low on the S&P, one tick low on the YM, pushed back up to that 30 level, held. We're watching to see. The important thing there is how the price reacts. Does it move down immediately? No, it was holding. Then we went up to 32, 4, 5, 6. Now we're at 39 on the YM, and the price is still holding there. It's still holding when we're seeing green. Okay, so we're seeing buying action, buying aggression, taking offers, but the sellers are holding it back at the moment. So we're seeing little ticks up, and showing a lot of difference between a normal push lower that just pulls back and grinds lower again, pushes back, grinds lower again, that we've been seeing all day, and the slight difference to that compared to what we see here, which is the push lower, the bounce back up, the hold, no revisit, fair bit of volume as well, which we can confirm on the time and sales. Lots of green coming through, lots of interest there, lots of buyers taking those sellers on the offer on the way up, a lot more interest there, and seeing the price response. That's the important thing, the response of the price as it moves away from lows, away from key levels that everyone's looking at. So as it moved away from the low, what's the response? Does it revisit? No. Holds. It actually starts to tick up. What's the response to that? Holds. And then if you've got the chart up, I've got the chart there, but they've got the chart up, you can see actually on the earlier of the video, it was the precursor for a counter trend move. So seeing that on the tape beforehand, seeing how the price reacts to certain short-term movements can help you judge and help you fine-tune either your short exit or your long entry, depending on how you're positioning yourself.